much, and a very warm welcome to everyone here at this, hopefully, a very, very informative event. The idea being that we give a complete overview of the property market, but also with our sort of guest speakers, with Kenneth and the world-famous David Lim. We're going to give you a very, very detailed insight into what's going on in the property market at the moment, but hopefully give you a bit of we're going to sort of try and really peel back the layers and give you a bit of a more of an in-depth view on what we think is going on, what's driving this property market resurgence, and really sort of give a full understanding of current market conditions. Okay, so we're going to start with economic highlights. I think everyone's aware of what's going on in the market at the moment. Last year we saw a record GDP growth coming in at about 6.7%. First quarter 2016 came in at a slightly below expected number of 5.5%. The official reason for that is global warming. I'm not quite sure how that translates to the GDP growth, but I think it's basically down to the sort of the agricultural sector and the Mekong region that's suffering from drought at the moment. The good news is the Chinese have turned on the tap, and hopefully we're going to see some water back in the Mekong region. So 5.5% for Q1. The very positive part about GDP growth, I think the projections for this year is about 6.7, 6.8%. That is the second fastest growing economy on a global basis. Vietnam is definitely back on the map. That's second only to India. So we're expecting a very strong year. Slightly slow start, so it remains to be seen whether we're going to see that 6.7% for the full year figures. CPI up slightly, 1.3% in Q1. Down in terms of transport services, that's obviously down to oil prices on a global basis, continuing to pretty much on the downward spiral despite some fluctuations. Medical services up slightly, well actually up quite considerably, 9.4%. Education, 3.6%. FDI for Q1, a fairly modest $240 million registered in 11 new projects. Real estate was registered as number 2 behind the manufacturing and processing sector, still way ahead of any other sectors. The big number for Q1 is tourism numbers, up considerably on the previous year, up 28%. China is the main driver of this. What we've seen since I think the Chinese premier came to Vietnam in the end of last year, we have seen a big uptick in terms of Chinese tourist numbers, and that is up 66%. Koreans following that by 30%. So tourism is very much on the bounce at the moment, and we expect that to continue in the following quarters. Moving on to the Ho Chi Minh market overview. So we'll start off with office. I always think it's good to just have a quick review of where we are in terms of the actual Grade A office market. This is a graph in terms of where we have come from. So 1996, some of you may or may not have been here. Actually, I can see a few faces that probably were here. They're all grinning and looking sort of very happy with themselves. Ken being one of them. 1996, we saw Saigon Centre come to the market, Keppel Land, and then since then, we've only had 9 Grade A buildings come to the market. And this is a 20 years and nine Grade A buildings. So what we have to remember, we're still talking about a very, very, very small market in terms of Grade A office space. Latest one being obviously Vietcom Bank Tower, which came into action at the end of last year. So Grade A current supply, 1.71 million. Again, if you compare that to other regional Southeast Asian markets, major cities around the region, this is a very, very small number. That Grade A section, the red section at the bottom is obviously a very small proportion of the market. The two new buildings coming to the market, what we're seeing at the moment is, and good construction rate is happening on Site and Centre Phase 2, which you'll see they're making great progress, and Deutsche House, which is the one next to Kumho. Only one very small supply coming through to the market in Q1 of 15,000 square meters, and it's Grade C, sort of suburban space. I think this is quite an interesting chart. This just shows a breakdown of the number of buildings in Ho Chi Minh, the number of office buildings in Ho Chi Minh. So there's only about 200 just over 200 office buildings in Ho Chi Minh, and only 14 of those buildings are over 20,000 square meters. Again, this sort of shows the size and the scale of the office market in Ho Chi Minh. And what we're seeing at the moment is that we have a lot of our big global corporate accounts are now looking to upsize and are looking for larger and larger space. The current office supply is limited as you can see by the slide, but we're now facing very much a shortage in terms of supply in the market, and certainly from larger quality, good quality buildings. You'll see from the two buildings here that these are the two buildings that came through to the market in 2016. Moving on to vacancy rates. This is probably a new high or low, depending on how you look at it. For Q1, we're now looking at on average a 6% vacancy rate throughout the office market. This is an incredibly low figure. We haven't seen this figure since I asked the research team to just look back yesterday to see when we last saw this figure. This is back to Q4 2008 was the last time we saw 6% vacancy rate. This is now showing that obviously very, very little supply in the market, so this will have an effect on rents going forward. A bit of a breakdown in terms of the actual vacancies in terms of grade, so 17,000 square meters in Grade A space, 21,000 Grade B, 22,000 in Grade C. Because of the lack of the supply in CBD, we're seeing that a lot of tenants are now considering space outside of CBD because of there's nothing available, and are now considering sort of outlying locations. And I think that's going to be a trend moving forward, certainly for the rest of this year. Net absorption rate for Q1, 30,000 square meters, but all Grade C and sort of suburban areas. Some of the major deals that have happened recently. So Orion moved from CJ Tower to Pearl Plaza. GIT moved from Petro Vietnam Tower to Pearl Plaza. Liberty Insurance from Kumho to Vincom. And BIC is a new acquisition to Pearl Plaza. So you see any new supply that's coming to the market, as example, Pearl Plaza is attracting a lot of interest purely because it's new space, and I think our friends at Grant Thornton have just relocated there as well. How is it, Ken?
Good.
Is it?
Yeah, very good.
There we go. And okay, moving on to average rents. So again, up across the board, all sectors, all grades up on the quarter. Grade A office now on average $38 per square meter per month. Grade B up slightly, $25 per square meter, and all grades up on the quarter. I think what we're seeing is landlords feel a little bit more confident about the market at the moment and are being slightly more aggressive in terms of quoting rents on renewal and certainly for new space requirements. Future supply, 2016, very little new supply coming to the market, nothing in grade A space, only 55,000 square metres in total currently recorded. So in terms of new supply for this year, very little activity coming to the market. 2017, we're going to see more activity, and I think that's good for the market because it's a little bit stagnant at the moment. So 2017, 136,000 square metres coming to the market. The two main grade A offices, as I mentioned, Saigon Centre Phase 2 and Deutsche House. There may be one other grade A office coming to the building, which will be, if it rises from the ashes, is Saigon 1 or M&C Tower. There are rumours that a deal has now been done, and the new owners are possibly going to get that building finished by the end of the year. I think that's unlikely, but it is possible. So if that comes to the market as well, we will see quite a lot of new supply come to the market 2017. And then on to 2018, currently about 74,000 square metres. Still fairly low numbers, and we expect the current market demand. I know our markets team are very, very active at the moment, and they're currently reporting we have active requirements for over 30 to 40,000 square metres. So if we have that sort of number of requirements, then I'm sure our competitors have the same number as well, or probably a bit less because they're not quite as good as us. But they will, there's plenty of demand at this moment in time. So moving on to the hot topic of the moment, and onto the residential market. Everyone's writing about it. It's claiming sort of international focus. Everyone's talking about Vietnam, and everyone's talking about the residential market. So I'm going to spend a bit of time on the residential side because I think a lot of people are quite interested to know what is happening at the moment. So in terms of Q1, what we saw, total stock only edged up slightly, about 1,100 units that came completed in the market, so about 77,000 units in terms of total stock. So some of the new supply that completed, all Novoland, to be honest, Prince Residence, Galaxy 9, and all Novoland projects. Hello. Okay, we're back. Hello. So all Novoland projects completed in Q1 of this year. Total stock for villas, again fairly quiet Q1 for completions. This is, and only again a Novoland project, Lucky Dragon, just over 30 units completed. This is where it gets interesting. So launches for Q1, 9,720 units launched in Q1. This is a record number again that had launched in Q1 2016, up 28% on the quarter, 63% year on year. This is a big number. You can't get away from it. This is a very large number of launches. Main concentration of launches is actually in the District 7 area with just over nearly 2,000 units. And what we're seeing is the proportion of new launches, again, this area here, just over 50% in the mid-end sector. So this is dominating the market, this mid-end sector, all the launches coming to the market, or 50% of the launches coming to the market in that area. New launches for villas and townhouses, 279 units launched in Q1. That's down 44% on the quarter, but up 98% on the main areas. District 9, 100 units. Nha Bay, 134 units. And Binh Chanh at 27 units. The proportion of affordable units is down actually to 38% in the quarter. So if you think back to the number of launches, and now we go to the number of sales rates, now this number is phenomenal as well, because Q1 has reported nearly 9,000 units sold in Q1. That again is a huge figure. I don't know how it's happening, but it's happening, it's real. I've asked our market research team to check and double check those numbers. They're very sure that these are accurate numbers. So again, up 19% on the quarter and a whopping 72% on the year. 46% of these sales are over $1,500 per square meter. So again, that mid-end sector, that mid to higher end sector is really dominating the market. Number of villas sold in the quarter, again, very active number. We've seen 250 units sold, down 33%, but up 58% on the year. Nha Bay district topped the market, and I think that's mainly down to the 9 South estate project by Vietnam Capital. Average price, this is what everyone wants to see, and make sure that your investments are doing quite well. We're reporting fairly good numbers in terms of average price rates. So our figures are showing on the quarter up just under 1%. And I think it's my English accent. The microphone has enough of it. Year on year, up 5%. So if you bought a unit last year, hopefully you've seen 5% growth on your unit from last year. Average prices, so up fairly good numbers for the year. And what we're seeing, all apartments now, average price for all apartments around that $1,300 a square meter. Average price for townhouse and villas, again, reporting fairly good numbers. 0.7% on the quarter and 4% on the year. Now, moving on to projected completions. This is where I think we need to just sort of stand back and take a look at what's going on in the market. Projected completions for the next 3 years, so 16, 17 and 18. So over 15,000 units completed, due for completion in 2016. 17, we're up to 32,000 units, and at the moment, 2018, again, another 30,000 units. If you cast your mind back to the number of the total stock that's currently available, we're at about 75,000 units. We're going to double that in the next 3 years. This is unprecedented for Vietnam, it's unprecedented for Ho Chi Minh. So we're doubling this stock in the next 3 years. I'll leave you to sort of make your own conclusions on what you think about that one. Some of the new projects, you'll know most of these. Sunrise City North Towers, VCP, which is Vinhome Central Park, Lexington Vista Verde, Scenic Valley, Mastery, and Central Park. Other phases, pretty much dominated currently by Ving Group and Nova Land. But what we are seeing is a number of other developers now coming into the market and more active in the market. So maybe that domination from Ving Group and Nova Land is not so prevalent moving forward. Projected completions for villas and townhouses. So 442 for 2016, big spike in 2017, which goes to 2,200 units, 2018 up to 1,200 units. Again, big increase on the current supply that we see at the moment. But again, in both sectors, in residential and in villas and in apartments, we are seeing very, very strong sales rates. So at the moment, the amount of supply that's coming through is the demand is very much keeping up with supply. So projected launches for the remainder of 2016, another 20,000 units. 30% of the units launched for the rest of this year will be in the high-end sector. And that's where I think we need to just be a little bit careful, because this mid to high-end sector, in terms of from an investment point of view and the leasability of that number of units in the market, I think investors just need to proceed with caution. Villa townhouses, up to 2,000 new units expected to launch for the remainder of 2016. Some of the new projects there, or the projects that are currently under construction, so Park Residence, Sala Shop Houses, Home Residence, probably the most exclusive residential development at this moment in time, certainly from a price point of view. 9 South Estates and the Saigon Pearl Villas. So I thought I'd just put a slide up about this, about Basson, or as you've probably seen if you've driven past in the last few days, Vinhome's Golden River. Again, fantastic site that's being awarded to Vin Group. This is, I think, one of the best locations in the city. Already under construction. We can see it. We've got a very good view from our office, and I can see construction progress on a daily basis. The site clearance is well underway. You'll probably see the show home already erected, and they will be launching very, very soon. There is 13 blocks of residential towers, plus associated all the villas that go with it. Quoting prices, rumours, quoting prices. Any guesses in the room? 5,000. 4,000. 4,500. Okay, that's about right. I'll tell you later. After a beer, if you buy me one. Moving on to retail. We'll have a quick look at the retail market. Again, where we've come from and where we are today, I think very, very similar to the office market. What we've seen since 1996, since Saigon Centre was developed, a fairly small number of retail shopping centres and retail podiums coming to the market. We've seen a little bit more activity in the latter stages in the last couple of years with Vivo City, Crescent, and obviously Vincom, again, sort of dominating the retail scene. But again, a small number when compared to other Southeast Asian markets. So total supply, currently 1.2 million square meters. That's a fairly low level number. 2 new shopping centres came to the market Q1 of this year. Vincom Plaza in Goba and Vincom Plaza in LeMeridien. Convenience stores seem to be dominating the market, or very active in the market at the moment. So convenience stores are really sort of convenience. I'll say F&B very much driving the retail market. So just the 2 new Vincom projects that came to the market. So 22,000 square meters in Gobat and 43,000 square meters in LeMeridien. Not sure about my Vietnamese pronunciation. Anyone understand?
It's okay.
Vacancy rates, I think retail is still really trying to find its feet in Vietnam. It's a real mixed bag. It's difficult to really put your handle on centres that are performing, centres that are not performing, retailers that are performing. You know, fashion seems to be going through a difficult phase. We know that F&B is working, we know that entertainment's working, but it's really on a locational basis, and obviously depending on the actual development and the shopping centre that a lot of these retailers are in. Shopping centres still seem to be finding it difficult to really attract consumers on a regular basis, which what we see on a regional basis, as Bangkok as an example. You go into a shopping centre in Bangkok, it's absolutely packed on a daily basis. Going to a shopping centre in Vietnam, it's still fairly quiet. So the mindset for shopping centres is still not quite there for the Vietnamese consumer. Total rents, so average net rents, CBD, about $64 a square metre. Obviously this is on average. I mean, there are much higher rents in the CBD locations. Non-CBD, about $34. New supply coming through to the market, so 137,000 square metres coming through in 2016. There's some quite exciting things happening on the retail side, and I think Saigon Centre Phase 2, from a retail point of view, is going to set a new benchmark in terms of retail in Vietnam. Anchored by Takashimaya, the Japanese department store, and the tenant mix, the design, the layout of the centre is, I think, really going to show the way forward from a retail point of view. So I would encourage, this is not a plug for Keppel Land or for the development, but if you're interested in retail, I would really look at the design and layout and the tenant mix of that centre, because I do think they are going to sort of set the new benchmark from a retail point of view. Aeon Bintan is also another new entrant to the market this year, due for completion. I think it's going to be ready by the middle of this year. Again, Aeon are doing things very well. We speak to the retailers with Aeon portfolio that was bought by Crescent Group from Singapore. Crescent Group held it for approximately sort of 18 to 24 months and have flipped it on again. So exchanged contracts about 2 weeks ago for a fairly healthy return on investment. And also Six Senses Công Dao is under offer as well. I'm more than happy to supply further information if you ply me with enough alcohol. Ki Nam, I think, again, attracted a lot of publicity, this one. I mean, from the sort of the press that's been sort of that you've probably seen about the residents that are unhappy, the service charge and everything else. This went to auction process, and Aeon Holdings have been selected as the preferred bidder for a reported $384 million US. We are actually I was on the phone to the new purchasers yesterday. They are looking to close by the end of this month. It's a very significant deal for the Vietnam market. So, outlook for 2016, a bit of crystal balling. We don't really like to do this very much, so I'm going to keep it fairly vague. What we're seeing is, from an economic point of view, I mean, projected GDP growth of 6.8%. As I mentioned earlier, second fastest economy in the world, second only to India. Obviously, there's a lot of global economy headwinds at the moment. I think China being the most relevant to Vietnam as a sort of a significant trading partner, but also on a global basis, as Vietnam is becoming a major exporter, I think this could have some effect in terms of GDP growth this year. One of the big issues that still needs to be addressed in Vietnam and still needs to be worked through is, whilst we have a very buoyant property market at the moment, there is still the issue of non-performing loans. And we've now been approached by a number of local banks quite recently to start selling their non-performing loan portfolios. So this needs to be done. This is creating, because of what has happened with the non-performing loans have been transferred into the VAMC, where you have $15 billion US of non-performing loans. What we're seeing is we're creating an artificial real estate market, because all of those non-performing loans are not being traded in the market, which then has a knock-on effect by causing sort of artificially high land values, because there's not enough stock in the market. So in our view, and my view in particular, this has to happen. This has to happen at some stage in order to create more liquidity in the market and get the market moving, and to try and bring land values down, because they're too high and it's making development very prohibitive. Office market, as mentioned, CBD, no supply coming through, so we expect office rents to increase this year. I would caveat that by saying landlords be slightly aware. I think you have a good run for the remainder of the year, but the new supply, and there's a lot of tenants now looking to start pre-leasing, which we haven't seen before. So that new supply is going to have a bit of an effect on rents later in the year, and certainly into 2017. Cycle 1, I think it will finally rise from the ashes, and I think it has to be a good thing for the market. Every investor that we see in the market that comes into the market asks me, what is happening with that building? It was exactly the same last year, it was exactly the same the year before. It's not a good thing for the city skyline to have that type of building being laid dormant for five years. Residential market, 6,500 units due for completion in 2016, compared to just over 8,500 in 2015. 20,000 launches this year. I think the good part is, rightly or wrongly, I mean, there's more developers that are coming into the market, so with perhaps that domination by Ving Group in particular is not going to be so prevalent, but obviously that's going to mean more supply. Prices expected to grow 1 to 2% per quarter. I think just on residential, we are seeing on the international side, from the foreigners buying residential in Vietnam, there is genuine interest in Vietnam at the moment from a foreign purchaser point of view. So a lot of Singaporeans, a lot of Japanese and Korean are now buying units in Vietnam. Change of legislation, to be honest, I was fairly sceptical whether we're going to see a large number of buyers, but testament to the system, there is genuine interest. The latest report is over 1,000 units have been sold to foreigners, so it's definitely happening. One of the key things that what we're working on at the moment, and this we think is a bit of a game changer, is we're now working with one of the international banks, which will start to supply mortgages to foreigners to buy property in Vietnam. That changes the landscape considerably, because at the moment it's all cash purchases that are buying property. So we'll keep you updated on that. We should be able to announce that in the next couple of weeks. Retail side, I think we've probably covered. Aeon Lotte Group, I think, are continuing to grow, but I think it's a real mixed bag. But the good news is there's some big international retail groups looking at Vietnam, the likes of Zara, Henny's, all these names that you've probably heard about before. IKEA, very much looking at the market at the moment, which I think is great could be very, very good for Vietnam. M&A side, huge amount of money wants to come into Vietnam. There are so many foreign developers at the moment that are actively looking at Vietnam. and there is literally hundreds of millions of dollars that want to go into Vietnam. So we're actively looking to place that money if anyone has a home for it. The key thing being, the reason for that is that Vietnam stands out very, very favourably now compared to most of its Southeast Asian counterparts. I think that is about it. One more slide. No. No. Okay. My favourite slide was at the end. I can't bring up my favourite slide. Keep you in suspense. There we go. Then that. Sorry. We've lost in translation. What I would say about the Vietnam real estate market, always expect the unexpected. There is going to be ups and downs, and you just never know what is going to happen. And I like this guy. I really, really like him. I think he's got something. We're going to recruit him. That's about it. Thank you very much, and see you soon.